Well, let's talk about Tata Steel's numbers. It's been an inline performance and the stock is reacting so. So let me welcome on board Mr. TV Narendran from Tata Steel to talk about not just the quarter gone by, but what lies ahead for Tata Steel. Mr. Narendran, great to have you in ET Now. First up, I want to talk about the macro setup and how can we not address the elephant in the room. The trade war concerns now seem to have abated, at least for the time being, the next 90 days, with US and China now having lower tariffs. China, meanwhile, continues to work on stimulating its economy. How is it that you read into these developments and the kind of impact it's going to have on global steel demand-supply equation?
Yeah, thank you. Thank you, Aisha, for having me on the show. Globally, it's been a pretty volatile few weeks or months with particularly the actions on the tariffs. It's good that it's settling down because that gives a little bit more certainty to supply chains and hopefully will reduce some of the inflationary pressures that we started seeing. As far as China is concerned, the biggest problem in China, as far as we are concerned, is the construction industry. Pretty much all other sectors are showing an increase in consumption of steel. It's the construction industry which is yet to recover. So we are obviously waiting and seeing if there are going to be any more measures from the Chinese government to prop up the construction industry, because China is still exporting about 10 million tons of steel a month, and which is way too much, and that's a concern. But I think overall it's positive that the world is coming to some sort of understanding on tariffs and things are settling in.
Where is it that you think the prices are headed? And could we see upside given that the worst of the trade war impact is behind us?
We've already seen some stabilization of prices, both in Europe and in India. The spreads have improved a bit because some of the raw material prices had gone down during the last quarter. As far as India is concerned, the safeguard duties have also helped. So we are seeing margins improving across geographies, which is reflected in our performance.
Within Europe, Mr. Narendran, after several quarters of losses, Netherlands has finally turned profitable in Q4. Will profitability expand further in the fiscal?
Absolutely. I think the way we look at Netherlands is it's always been a very profitable business for us. It's just that in the last 2-3 years, we had both some external issues and internal issues. The external issues are related to the Russia-Ukraine war and the impact it had on gas prices, electricity charges, and hence input costs. As far as internal issues are concerned, we had a blast furnace relining, which took longer than it should have. We had a cold rolling mill upgrade, which also had some issues. So we had a challenging couple of years, and which was reflected in the quarterly performance that you mentioned. But last year, we've had pretty much full production, almost 6.75 million tons, which is the highest we've done in many years. And even though the spreads have not been great, in fact, the spreads have compressed during the year, you see that the Netherlands business has delivered almost 100 million euro EBITDA positive compared to the 450 or 500 million euro negative EBITDA that they had the previous year. So the trajectory is good, and we are focusing a lot on transformation costs, taking out costs, controllable costs, both in UK and Netherlands. So you should see the European business continue on this trajectory.
Specifically, how far have the discussions with the government of Netherlands on the integrated decarbonization and environmental measures reached? If you could just help me with a tentative timeline.
So it's progressing quite well. We've had a lot of deep discussions. We are hoping that during this year, we will come to a conclusion. Maybe towards the second half of this calendar year is when we think we should come to some sort of conclusion, because when we negotiate with the Netherlands government, we also need to keep the EU in mind. So the Netherlands government also has to get the requisite clearances from the European Union. So all this is going on. So we hope that in the second half of the year, we will conclude some sort of an understanding with the Dutch government.
Is there a number? How much grant are you seeking from the Netherlands government?
Well, I can't give you a number just yet, but it has to be substantial because the project is much larger than what we're doing in the UK. Typically, if you look at a thumb rule in Europe, the expectation is 40 to 60% of the capex should be given as a grant. Otherwise, honestly, the viability of the business case is not there.
UK's EBITDA, Mr. Narendran, has, the loss there has expanded, both on a year-on-year as well as sequential basis because of your lower realizations and higher other expenses that you've incurred. Is the transition now on track?
It is, like I said, Netherlands is already on positive EBITDA territory for the last 2 quarters. It'll continue to be that way. We've announced that we're going through a big transformation program to take out another 500 million euros of costs in Netherlands, and a lot of that should start accruing this year. In the UK, we've already taken out about 230 million pounds of fixed costs during the last year. We'll be taking out another 200 million pounds of fixed costs this year. And hence, you will start seeing the UK, which has traditionally been a significantly negative EBITDA business, come back to break even or positive during the year.
Right. Your India deliveries, they grew by about 5%, right, in FY25. What about FY26? Is that expected to be a stronger one than FY25? And is demand resilient in India and despite global turmoil?
I think the demand is quite resilient in India, and at least as far as Tata Steel is concerned, we've never really had to export much, even in the past, and we don't need to do it today because we have very strong equity with our customers. We have a very strong distribution network. So I think we are very comfortable that any additional volume that we bring in, we will be able to sell in the domestic market. So this year we will have at least 1.5 million tons more to sell in India than we did last year, because the Kalinganagar plant is ramping up. And but we have a blast furnace relining in Jamshedpur, so that takes out some of the volumes. But net, we should have at least 1.5 million tons more to sell this year than last year in India.
I want to talk about your net debt because that's also seen a dip of about 4% on a sequential basis. Tell me any further reduction that one can expect? Is there any deleveraging roadmap that you worked out?
Yeah. So I think last couple of years have been challenging because of our underperformance in Europe, as well as the fact that we were spending capex in India but not getting the additional volumes because the Kalinganagar expansion was, coming to its last stages. But we see the impact of that even in the last 6 months. The net debt in end September, when we announced our results, was 88,000 crores. We've brought it down to 82,000 crores, 6,000 crores in the last 6 months. We expect it to go down further during this year as we get the additional volumes and if the margins stabilize at this levels or gets better. So I'm not giving you a specific number, but certainly we will see deleveraging happen more during this year.
After months of back and forth, Mr. Narendran, the government has finally imposed a 12% safeguard duty on steel last month here in India. Is 12% duty aiding the industry? After counting for this duty, are domestic steel prices still at a premium versus import prices?
So 12% is better than zero. So to that extent, yes, it's helping us. It may not be as much as what we had sought, but I think the government has to balance the requirements of all stakeholders because there are consumers of steel who get worked up if the safeguard duty is higher. So we respect that. I think 12% has brought some stability in. The fact that there was a safeguard duty being brought in also brought some stability in. So we've seen steel prices go up about 3,000 rupees compared to last quarter. But we are still way below long-term average steel prices. But that's also a reflection of the international prices thanks to Chinese exports. But we are basically looking at an industry which should be healthy financially because of the kind of investments we have planned. I mean, even Tata Steel has spent 15,000 crores of capex last year. We'll spend another 15,000 crores this year. So, and the steel industry has been leading the private sector investment. So if you want private sector investment, if you want the steel industry to invest, you need a healthy industry and not a financially fragile industry. So I think prices need to be at a decent level. We are moving towards that. We are not where we want to be, but I think it's better than where we were a few months back.
Okay, so I have two follow-up questions here. Firstly, is there a risk that Chinese prices can still fall below domestic prices even after the safeguard duty?
I think the chances are limited simply because the Chinese steel companies were clearly losing money at these prices. So it's not that it was profitable for them. And secondly, I see coking coal prices starting to creep up. It's already gone up about $20 in the last few weeks, maybe 6 weeks. And that will act as a, backstop as far as the prices are concerned because I know prices are also stable at around 100. And if coking coal comes closer to 200, it's around 190 now. I don't think there's any more room for steel prices to drop. But our concern has always been some players in the Chinese industry continue to produce and sell even if they lose money. And that's where safeguard duties and actions like that help.
And has the industry appealed to the government here to increase the safeguard duty above 12%?
I mean, we will always seek that, but I fully understand that the government may be reluctant given the other pressures. I think they don't want to have any inflationary pressure in the country. So I think we will live with this for now, unless, like you said, the Chinese get even more aggressive as far as pricing is concerned.
Okay, Mr. Narendran. Lots of moving parts, and we'll chat again soon. But good luck and congratulations on your quarterly performance once again.
Thank you, Aisha. Thank you.
Thanks.
If you like this video, then like, share and subscribe to ET Now.